You want to start day trading options, but you have zero idea what to get, how to buy, how to sell, what brokerages you need, and also what charting application to get started. Well, in this video, you're going to figure out all those things in a short amount of time. So stick with me. Make sure you leave a like and subscribe if you are new, and let's get right into it. The first thing we're going to start off with is a brokerage. This is where you're going to place all your trades, your buy orders, your sell orders, all that good stuff, and hopefully make some money. So I have two brokerages that I personally use. They're both really good and they have their own, pros and cons, but you cannot mess up by choosing one or the other. They are both the best in the game. So the best overall for beginners, in my opinion, is Robinhood. So this is going to be Robinhood. They are the best brokerage for overall beginners. Their mobile UI, so like what it looks like on your phone, looks really good. And the computer version looks really good as well. And they're always advancing and always moving one step further. This is probably my favorite one if you're a beginner. If you're interested in this one, make sure to go to the description down below, get my link, and if you use my link, we both get free stocks up to like $1,000, I'm pretty sure. So you would only benefit if you use my link, and obviously I benefit as well. It's just a win-win for both sides here. You're going to sign up and it's a quick step process. Obviously they need a lot of legality stuff, so like your ID, your name, your address, where you're from, how much money you make, all that good stuff. Very quick, very simple, and very understandable when you're trying to make money on a website like this. The other really good brokerage that I really like is going to be Webull. This is what Webull's desktop version looks like. This one I have a brokerage with. I love to use them as well. It's good on the mobile, so it's good on your phone if you're like traveling or whatever and you want to start trading. It's also good on the iPad, computer, whatever it might be. It's very similar to Robinhood, but in my opinion, I think Robinhood is like the more advanced one and is always going uphill and making Robinhood the best place to trade on. But Webull is a great one and I trade with them as well. Robinhood and Webull, top two for me. If you end up choosing Webull, I have a link down in the description below. Go click that link, sign up through there, and we both get a free stock up to $1,000 as well. So any brokerage you use, it's a win-win for both of us. So if you're completely new and you don't know what calls and puts are on the options chain, let's just go over it real quick. An option is a contract that tracks the price of the stock. You're not buying the stock, you're buying a contract that moves with the stock. There's two types. Calls, you want the price to go up. So this means if you're buying calls on ABC, right? Just whatever. That means you want ABC to go up in share value. That means your option will start to make money. And if you're looking for a downside move and you want to make money on the downside, then you're going to buy puts. This is how people make money when there's a down market or a downtrend or whatever it might be, is that because they put their money in these option contracts thinking that the stock price or ETF, whatever it might be, is going to go down and they can make money on the downside as well. So that is going to be your puts. Now that we went over what these options mean, let's get into the option settings that you have to set up right when you start trading. So the first thing you're going to do is you're going to have to apply for options before you start trading them. It's not that confusing. It's very simple, very easy to do so. And what you're going to answer is questions like this: trading experience, income range, risk tolerance, and why you want to trade options. These are very simple questions, very easy questions. Be completely honest on those questions. They just want to be on the same page as you. And what this is going to do is give them a risk tolerance of how much you should be trading and all that good stuff. Once you do all those questions, very simple. It takes less than 2 minutes. Level 2 is the option approval you want to get. This is where you can do basic strategies. You can buy calls, you can buy puts, and all that good stuff. If you're a beginner, these are the only 3 things you should be focusing on. The rest of the options journey will come later on. Let's focus on these 3 things first. The direction you want that option contract to go. So you're either going to buy calls if you want it to go up, and if you're buying puts, that means you want it to go down. You can play trend lines, you can play chart patterns, all that good stuff. Now this is where it becomes a little bit more confusing. There's timing, there's expirations on these contracts. So the closer you buy an option contract, so say you're buying an option contract on Monday, right? And the option contract expires that Friday. That means these option contracts are going to be very volatile. They're going to move up and down very quickly. And what this means is that if you're putting in a lot of money and you start seeing it move very quickly, then you're probably going to be stressing out about that option contract. What you need to understand is that the closer expiration date you have, the more volatile it will be. And so with me personally, in my trading, I like to buy further out expirations. They're more pricey, but I don't want to have to worry about all that fast movement and that very volatile movement, unless I'm being very risky with my trade. And if I'm being risky with my trade, that means I'm going to size a lot lighter. So for me personally, I always like to give myself time, 1 to 3 weeks, maybe even longer if it's a swing trade, right? The longer you go out, the more, stable that option contract would be. But a lot of beginners think, oh, this is a cheaper option contract, so let's go with that, put hard-earned money on that one. But in reality, sometimes those cheaper option contracts work against you, and that's why they're cheaper. So my rule of thumb is if I can buy for a further out expiration, let's do that. So liquidity is a big thing, but for a beginner, you're probably going to be only trading blue chip stocks anyways, most likely. And so if you're trading like Nvidia, Meta, the big names in the stock market, right? The big companies, the stocks that are in the S&P 500, those are typically more liquid and they're more safer to trade and they have tighter spreads. If you're trading a stock that barely gets any volume on that stock, then it kind of works against you. It's a little bit more risky because the spreads are so far out. That's kind of more of an advanced thing, so I wouldn't worry about that. But I would try to personally stick with the big names first to get a feel for it. And if you want to paper trade, you can definitely start paper trading first. I actually support paper trading. I think you should get, the hang of buying calls and buying puts on expirations and all that good stuff on paper trading. You can do it on Robinhood, Webull, TradingView. There's a lot of places out there. It's very, very simple. So kind of going over strike price and expiration again, avoid complexity, keep it visual. So the expiration, the date your contract expires. That's what that means. If you're wrong by the date, the contracts lose value very fast. That's why I always like to give myself more time than needed. The strike price, the price level your contract is based on. I think beginners should pick at the money or slightly in the money for safer moves. So if you're doing a longer out expiration and you're picking at the money or in the money, whatever it might be, that means the contract won't be doing this while you're in it. It'll be more stable, whatever it might be. So a little example real quick. If SPY is at $500, buy $500 call at the money. This is going to be a pricier contract, but sometimes paying that pricier contract can keep you safer. Buy $495 call in the money. These are the safe options. But if you want a little bit more risky, you can buy a 510 call that's out the money, cheaper, but riskier, obviously. So this is what most beginners like to do. They're trying to predict the direction instead of reacting to price. A lot of people just try to predict, think they're just geniuses if they win one trade. This is where the market gets you. Most beginners yellow out the money contracts. They trade the wrong expiration, so they trade it a lot shorter, right? And their contract just gets eaten up. Just remember, trading is not like gambling, man. You got to be very boring when it comes to trading. If you're trading for entertainment, that's what you're doing wrong. If you're trading boringly, if that's a word, that's the better way to do it. That's how I like to do it. I have a boring strategy. I stick with that strategy and only trade with that strategy. The next thing you're going to need is a charting application. What is that? That is where you're going to chart out all your stocks and ETFs. You can see I draw trend lines, I draw boxes, I draw all this good stuff, right? And this is where you can see all the stocks that you need to see, everything, all the important stocks. I mean, I'm drawing a lot of stuff here, so it's really messy. Bear with me. Yours will look a lot cleaner than mine. But this is where you're going to chart all your stocks. So you're not just going to be placing trades on Robinhood or Webull without looking at the stock. So you need a charting application. This is the only one I've ever used. This is the only one that I know that most people only use. This is a no-brainer. TradingView is by far the best charting application. So this is in your app store. So if you have an iPhone, you can go download it on your phone. Or if you're doing it on a computer like me, you can go type in TradingView, download it to your Windows or, other computer, Apple computer, whatever it might be. That is mandatory when you're starting to trade because you need to learn how to draw supply and demand, trend lines, all that good stuff. So how do you place a trade and what are you looking at? So what you're going to do is choose the stock, SPY, QQ, Apple, Nvidia, Meta, whatever it might be. And then after you choose the stock, you're going to decide the direction you want to buy. Do you think it's going to go up? Do you think it's going to go down? If you think it's going to go up, you're going to buy calls. If you think it's going to go down, you're going to buy puts. After you decide that, you're going to go choose your expiration, same week, next week. I prefer going out with my contracts to keep it a little bit safer. But if you're looking for the cheaper and riskier, you're going to do like same week or, anything like that. My friendly advice that I give to myself is that I always want to buy more time than needed. And then you're going to pick a strike close to that current price. So if Apple's at $200 a share and you think it's going to go to 220, well, you can buy maybe a potentially like 205 call if you want, maybe a 210, just to make sure you're in the money at the right time. Enter a limit order, never a market order. And you can start with a small size if you want to. Maybe buying one contract, or you can paper trade, doing it with paper money. But yeah, that's exactly how you're going to start trading in 2026. Here's a friendly thing to throw out there. Take it slow. Trading is a long journey, but it can be shortened if you're smart with your money. Remember, start off small. Pick a brokerage. Pick a charting application. Learn the basics. And most importantly, out everything, manage your risk. Because with this trading journey that I've been on, and like people I know that trade as well, we have all learned that it doesn't matter what strategy you trade, what indicator you use, it all comes down to the best loser. And what that means is the best one at managing the risk. Because it's not hard to make money in trading, it's hard to keep the money you made in trading. And that comes down to risk management. Hope you guys enjoyed this video. If y'all need anything, make sure to comment down below. I'll try to make that video. I live trade every single day inside of my trading community, the Oasis trading community. The description is down below, or you can go to wob.com/Oasis Alerts. Reminder, if you are signing up for a brokerage, go down below and use the links as well. It's a win-win for both of us. We can get stocks up to $1,000 potentially. It's literally free money for you signing up through my link. Y'all have a good 2026, and I wish you the best trading career. Remember, take it slow, and I wish you the best.